NVIDIA, with just 2 days away, people are starting to sell their NVIDIA. Don't make the same mistake one of our investors made this morning. He had a sell order placed to protect him, and he ended up, his words, he lost $10,000. What we've got right now is preparation for the biggest earnings of the year. We've got NVIDIA on August 28th after hours, and of course we're going to cover it live. It's doing exactly what we expected it to do. We've had the rally, we've had the Jackson hole, we know rates are getting cut, we know the markets are going up 10% more this year just on the S&P. Still believe that NVIDIA is going to $200 within 12 months, 130, 140 on the earnings. We're already there. We've just sold off now. If you set a sell order at this level and it goes down, does it protect you or does it cause you losses? Now remember, a sell order is there to protect you from losses, not to create losses. If you've bought the stock, say you bought the stock at NVIDIA for 100 and it went up to 130 and you've said, okay, if it sells at 125, sell. Okay, you've made money. You've made money. What's wrong with that? But remember, nothing wrong with that. That's okay. But remember, if you try and buy it back on the same account, you can't buy it back for 30 days if you want to post a loss, if you do lose. If you make money, that's fine. You can buy it back whenever you want. You can trade in and out 20 times a day. Infinitely amounts, entirely up to you. But a sell order is to protect you. Now, if you are a trader and you don't know the stock, you don't care about the stock, you don't believe in the stock, well, why are you buying it anyway? I only buy businesses I can own for 10 years. But if you are trading the stock and you're setting a sell order, that's because you don't believe in it and you're protecting yourself. Now, you can make a big mistake here because the stock is going to be volatile. We said it would all week up to the earnings because people are driving it down, selling it off to buy it back again. Makes perfect sense, right? That's what you do. Just because it's going to be good and the earnings are going to be good, that's what we believe. People are still going to sell it, drive it down to buy it back. Because remember, those that can move the stock bought it when it was thousands of percent lower than this. So they are in the money. They've got no issue with setting sell orders. But if you've just bought this stock at 127 a few days ago and it went to 130 and then you've set a sell order at 126, 25, 24, you're selling it for losses. You're losing money. Well, what's the point of doing that unless you want to post a tax loss? And if you want to post a tax loss, remember you can't buy it back on the same account for 30 days for the wash sale rule. So just bear that in mind. However, why did you buy it if you believe in the company and the business? If you believe in the company and the business like I do, you're expecting it to go 130, 140, 150, all the way to $200. That's what I think is going to happen. So stop orders are an okay idea if you've made a good profit, not to sell it for a loss to protect yourself if it goes down. Because at the end of the day, if you bought this and you like it and you want to hold it, what you want to be doing is buying more when it goes down, not selling it. So I've always said sell orders aren't that helpful. Because if you think, well, I'll set it on a support line or a resistance line or whatever you want to, you're looking at a chart and you're finding all these positions. Remember, everybody else is doing the same thing. So there's lots of buying and selling at these levels. So you got to remember that as you approach that, others are going to start triggering and it's going to fall quicker and you could end up selling for a loss. It's very, very important. If you are setting a sell order, make sure either you intentionally want to lose money, but then you can't buy it back for 30 days on the same account, or you're setting it above your position that you bought it in, so you're making a profit. Never lose money. It's the rule number one. I never lose money, number one. Number two, did you buy the stock as an investment or as a trade? Clearly, it wasn't a good trade selling it for a loss, was it? So just consider buying orders only benefit one person. That is the brokerage. They make money when you trade. Even Robinhood, who appear for it to be free, they still wholesale the trades with the market makers. They make money when you buy and when you sell. And then what are you going to do then? Have to chase and start paying up and start buying it more? Because remember, if you've lost and now you're considering buying back, the chances are you're going to be waiting around thinking, I'll wait for it to go lower. It doesn't go lower. It starts to go higher and you end up chasing it. Now you've lost again because you lost on the way down and you're losing on the way up because you're paying too much for it. My suggestion would be, if you like NVIDIA and we've got 2 days before an earnings, you should be buying more if it drops and holding it. At least if you believe it's going to do well on earnings, which I do. So be very, very careful. A lot of people are getting stung on this one. Here we go. Matt Dillon says, I was trying to protect $300,000. You were trying to protect $300,000. What's going on here? Huge mistake. I thought it would run up until earnings. I should have known that big money would manipulate the prices before to make more on the spike upwards. That's correct. Very often, people get carried away and they think, if it's good news and we like this stock, it's going to keep going up and up and up. Well, nothing goes up forever, of course. At some point, people want to take profit, and that's fine. You're selling it for the maximum amount that you think it's going to go up, at least in the next 12 months, and you take a profit, unless you're a long-term investor like I am and you want to own the business, right? But very often, a good outcome and a good projection of the earnings will mean it sells off, especially before the earnings and right before the earnings. On Wednesday night, August the 28th, there will probably be a leak of the earnings. We've seen that happen before on Amazon. It went down 10% once. Remember that famous incident when I bought a few shares of Amazon when it went down 10%? That was sort of pretty cool. Someone could leak it. Even if they don't leak it and it comes out, and even if it's good, people could go sell, because they know they want to buy it back. Remember that. People always think if the earnings is great, everyone's going to buy and want to buy more. It often goes the other way because everybody wants to sell because they know it's now a great business. They know it's going to go up after earnings. So now they can sell it really quickly, drive it all the way back down. Everyone starts dumping on a really good earnings, and then it goes up again. And that's all very well and good. You think, what a brilliant plan that is then. I'll sell for a profit, let it drive down and buy it. The problem is one, the tax implications, but secondly, when do you start buying? When you're in the stock, you sit back and relax. You don't worry. You bought it when it was low, months ago, like I've been buying the S&P since January, and that means I own NVIDIA for 20%, 30% lower than it is now. I like that, and I want to own it at that level. If it starts falling, at what point do you start buying? And remember, you just sold. So the moral of this story is, don't play checkers, play chess. Consider 10 moves ahead before you do anything. Just because you can trade doesn't mean you should trade. Just stand back, relax, and think, what is my next 10 moves? Not just, well, now I'm going to do this, and then now what do I do next because I did that? You're never going to win a game of chess if you simply react to every step after you've made the step and see what the next person does. You've got to consider the next moves. So be very careful. We've got just a few hours really before the earnings. It's Monday night at the making of this video. We've got just 48 hours before the earnings, and there'll be volatility between now and then. Just one thing to note, in case anyone is in any doubt whatsoever. As we know, tensions have broken out in the Middle East again. That is not this. Meet Kevin will tell you, yes, World War III is breaking out again for the umpteenth time. No. If we thought the markets were dumping and everybody was out and all the rest of it, my S&P 500 would be down today by about 4 or 5%. Remember, I'm in margin, which doubles my position down. I'm only down 0.63, which means the market is down about 0.3. A ripple on the pond. There's no selling because of what's going on in the Middle East. So don't put that down to it. It's a scare. We're all getting about the markets are going to dump and all the rest of it. What's happening is repositioning of NVIDIA. That's what's happening. Be very, very careful. Don't get caught out because you'll end up losing on the way down, losing on the way up, paying tax on every position you've got. And in the end, the stock will rally and you'll be left behind. And then it'll be like, if only I just stayed in the first place. All you've got to do is ask yourself, are you a trader or are you an investor? Decide who you are. Are you trying to trade the stock? Are you trying to own the business? If you own the business, 99% chance you're going to do very well. Long term, just leave it and do nothing and just buy more when it goes down, add to your position. If you are a trader, you're gambling right now because there's manipulation going on. Not a terrible manipulation. People will often say on YouTube that there's a conspiracy going on to stuff it to the little man, make all the retail investors lose all their money and Wall Street. No. If you go to Wall Street, you will know that in Wall Street, there's a bunch of computers with a handful of people walking around the floor. There's not a load of people running around trying to stuff it to you, sat in your house on Robinhood. There isn't. It's all programmed in. The algorithms are all set up. At this level we buy, at this level we sell, yada, yada, yada. There's no conspiracy or anything going on to stuff it to the little man and Wall Street always win. There's no one running around doing that. The decisions are just they're just mathematically calculated to trade. If this happens, do this. That's it. There's no emotion attached to it. So don't you do that. That's the biggest mistake that retail investors think. They think the world is out to get them and everyone's going to drive it down, excuse me, before the earnings so we all lose money. It isn't. They're driving it down so they can make money. You're just collateral damage. They don't even know you exist or even care. Nothing personal. They're just trading. They're playing the game just the way you are. The difference is they're playing it in a much better way than you can. You haven't got the power to manipulate the stock. You haven't got enough shares to do it. You can't trade fast enough. So, at the end of the day, you don't want to play that game. You simply have decided you like the stock, you own the stock, you buy more when it goes down, and that's it. Trying to trade it is a gamble right before the earnings. It's a really, really bad mistake. And I'm sure on Wednesday night, the stock will go up and we'll all be proved well. Even if it drops before, at some point it'll go up again. And a week from now, 2 weeks from now, as we start to be 140, 150, you're going to go, if I stayed in the stock, I would have been up. I wouldn't have had to sell. I wouldn't have had any tax events. I'm golden. Anyway, don't make the mistake of being duped into setting limit orders and selling on the way down for losses. Be much more smarter than that. Click above my head for all the links down below in the description. I shall post the event, the earnings down here. I shall also post here the event itself. This is the earnings. It's changed. It's a brand new stream because we're going to go earlier and provide extra services that we wasn't going to provide originally. So there's a brand new stream. If you've already liked it and been to the stream, go again because that one's deleted. It's a brand new stream. Go there. And down here, I'll put the playlist of NVIDIA and everything NVIDIA related, charts and the technicals from Sensei will all be in there. That's it from me. Be careful. It's not a conspiracy, but you don't want to miss out on which potentially could be your greatest move of the year. Until next time, as always, take care of yourselves and each other.